before going into the presentation, see, recently new RBI governor was appointed, as well as SEBI chairman also a new person. And if you see the action of these two heads, it looks that they are going to be very supportive for our economy and market. RBI action, particularly if you see in the last 1 month, 1.5 months, if you see, they are doing whatever necessary to boost the economy, they are doing it. Open market operations. Actually, economy cash was negative, but after he came, he made the surplus. Today or yesterday also he did open market operations and he injected huge liquidity in the economy. And 2 times rate cut has been done, 25 basis point, 25 basis point, and his speech and all extremely dovish. And if you see the SEBI chairman, his action also is going to be very supportive for the market. Whatever if you watch his interview, it looks that he is going to be very supportive for the market. He wants to remove unnecessary compliance, because in the last 3-4 years, if you see, all the intermediaries were suffering from huge compliance issues. Not only intermediaries, many foreign institutions also, and he wants to reduce the burden on compliance issues. As well as one major reform they are going to bring it in the next 1 year is that right now only foreign institutions can invest in our country, be it a pension fund, sovereign fund, university funds. They alone are allowed to invest in our market. If a foreign individual wants to invest in our market, means it's not possible as of now. You know that many Indians own American shares like Microsoft personally in their demat account. But if a foreign individual wants to own a Indian share directly in his demat account, means it's not possible as of now, because regulations don't allow it. Only foreign institutions are allowed to own Indian shares. But the SEBI and RBI, they are thinking very seriously to allow foreign individuals to own Indian shares. Just like if you want to purchase a Japanese company shares, or if you want to buy an American shares, we can buy it now. Similarly, if a Japanese person wants to buy an individual company, he wants to own an pharmaceutical company, means he can directly invest in our market. So it is going to be a landmark reform which may come in the next 1 year. If it comes, means it will further add depth to our market, and it will be very long-term positive. And a serious discussion is going on between RBI and SEBI regarding this. Most probably it may come in the next 1 year, that's what I feel. And if you come to the market, you see market was extremely volatile. But volatility in our market is far less when you compare to the global markets, be it any European or Asian markets or US market. Our volatility was much less when they compare to the other global markets. DAX and all, it was falling very easily by 1,000 points, 4%, 5% intraday very easily. But whereas in this tariff-led correction, our market relatively done well. Moreover, foreign institutions did not sell much in this fall. Only one day they sold around 9,000 crores, they sold it. Apart from that, we haven't seen major selling by foreign institutions in this tariff-led sell-off, which happened globally. Hang Seng and all one day fell by 12%, the index fell. Almost 2,000, more than 2,000 points it fell on a single day. Similarly, Dow Jones fell very sharply, and Nasdaq also fell very sharply. So overall our market held in this correction. Even though we fell, it is much lesser than what it happened globally. So this shows some resilience is happening in our market. But we fell in the month of October, November, December, we fell yearly, but some resilience is there as of now, which shows that the downfall is much limited from here, but upside it will depends upon how the events pan out in coming days, which is very difficult to tell as of now. So most probably we are expecting a range bound market, but a big downfall from here is unexpected. We are not expecting unless a huge some situations happens between China and US. And the reciprocal tariff announced, and after sharp fall in the market, Trump US president has paused it. So like huge drama was happening in the US market as well as in global market. Few days back when I was watching this US market, Dow Jones was around minus 800 points. Within 1 minute, it went to positive 400, 500 points. And the flash news was that the US president is considering to pass reciprocal tariff. And after 1 minute, what happened that this news is fake, White House has denied it, again it fell. So such a huge volatility was there. Even VIX was at around 50 in US market. So the volatility and options and call options and put option, the premium was extremely volatile and very high in US market. And the reason for that is that the reciprocal tariff was much higher than expected. We will see in coming slide how it was calculated and what it was expected, how it was calculated. But when it was expected, for India and all, it is expected to be around 10%, but they actually leave it 26%. It was much higher than expected. That is why the market reaction has been very negative. And one thing is sure, suppose if they implement the tariff, means the first casualty is going to be the US consumers and the US economy, because they have to pay the higher prices and it will reflect in the inflation rate. And the second thing is that shortage of goods will happen, because many people will try to buy it, as well as the producers may stop sending the products to US because of a lack of clarity and the possibility of rollback of reciprocal tariff. So shortage of goods will happen. So the first casualty will definitely is going to be US consumers and US economy, and the second order, third order impact will be there. And because of that fear of global slowdown, the commodities also fell very sharply. And if you see that the crude oil price from $75, it fell to $60. Within 4-5 trading session, it fell. Such a sharp fall happened in crude oil prices, and it will benefit us to some extent. And geopolitical realignment is going to happen, may happen in coming months. It will happen because of US speech and all, very Trump and all. If you hear the Trump speech and all, any leader may not go to US for talking. Such a heavyweight speech he has been doing, and most probably he may turn it down. We will see how it pans out. And Nifty and Sensex, in the last meeting and this meeting, it is up by 1%. Mid and small cap, mid cap by 2.5 and small cap by 0.5%. It is up. And just now we have entered the financial year, and if you see that only in the last 21 years, between 2004-5 to 24-25, if you see, only 4-5 times Nifty has given negative return. One is 2008-9 due to financial crisis, at that time 36% fell, 11-12 9%, then 15-16 8%, 19-20 due to COVID time, that is 26%, and 2 years back just a flat ending 0.6. And this year we have got a lackluster return of just 5%. The first half of 24-25 was very good, but in the second half most of the gain wiped out. So overall just a 5% return we had it in 24-25. And the reciprocal tariff, that is the headlines, it was announced, and then it is passed for 90 days. And the main thing about reciprocal tariff was that it is larger than expected. For India, it was expected to be around 10%, whereas the actual came was 26. Similarly, almost all countries, it was much higher than expected, because initially they told that they are going to charge what other countries charge to US products. That was initially told. But actual happened was that they took a different formula and then they calculated, and it came well above the expected rate. So that was the big disappointment. And a minimum 10% minimum tariff for all countries. So that is the main thing. Even if you charge 0% on US products, for all products, they will charge us 10% minimum tariff. And the weighted average tariff now increases to 29%. So if they implement all the reciprocal tariff as they have said, the overall tariff will increase to 29%. So whatever products comes to US, that will come, the price will go up by 29%, because on an average, because the weighted average tariff increases to 29%. It is the highest in 100+ years. And naturally, what will happen? The higher price will lead to higher inflation, then recession in US, and because of a world largest economy going into recession, global economy slowdown will happen, and there is a huge uncertainty will come. And because of that, this reason why market has fell very sharply. Now tariff has been passed for 90 days except China. Big auction is happening between US and China now. One day US will tell 100, the next day China will tell 80. The next day again US will tell 125, then China will tell 105. Like that auction has been going on for the last few days between China and US. So the final tariff is still unclear when it will end. Overall, this 10% is universal tariff is there for all countries during this 90 days pause period. So the 10% tariff still exists, whereas the other tariff they have stopped it for 90 days. So this is the reciprocal tariff chart. So if you see that China has been initially slapped with a 34% tariff, already 20% he did it before this was announced. So totally it became 54. After that it was keep on increasing. Now as on date it is I think around 150, 145% tariff is there for China. European Union 20%, Vietnam 46%, Taiwan 32%, and Japan if you see 24%. See, we have to remember that Japan is one of the largest holder of this US bond. That means they have financed the US government almost 1 trillion. And if you charge that country with a 24% tariff means, why should they finance US government? Why should they buy US bond? That is the big question comes. India 26%, South Korea 25%. So like that all countries are there. So one thing which is very interesting is that the more the countries are poor, the higher the tariff. That was there. For example, Bangladesh see 37, Sri Lanka you see 44. Very small poor countries, lot of African countries were there. They were slapped with 50% tariff, 60% tariff like that. So it lacks logical. This reciprocal tariff calculation lacks logical. Since they are poor countries, they are not importing any product from US. So naturally the tariff came higher for them. And this is the slide which the Trump showed in his press meeting. See, this is what they told. For example, what they telling was that India is charging 50% tariff, and they are giving they are very kind to other countries. So they are giving 50% discount to them, and they will charge only 26%. So what they told was that they are very kind, and they have given 50% discount to the tariffs charged in the US. For example, European Union charges 39% for American products, and whereas US charges just 20% as reciprocal tariff. Like that Trump has told. In that many countries were there. For example, Laos is a very small country where it has been charged with 48% tariff. Bangladesh you see 37, Sri Lanka 44. Very small country means higher the tariff. Madagascar is an East African island. If you see, they are charged with 47%. It's a very poor country. It's not though they have a lot of natural resources. It's a very poor country. They are charged with 47% tariff. Myanmar, Burma recently the earthquake came and a lot of damages happened to their economy. They are charged with 44% tariff. They have charged. So this calculation and all totally illogical. And what happened was that this reciprocal tariff calculation has been baffled everyone. See, initially Trump what he told in all press meet was that reciprocal tariff is simple. How much you are going to charge to us, we will charge the same percentage to you. That is what Trump told in almost all press meet he told. But when the actual data came, it was completely different. If you see that the World Organization, they tell that India charges around 13% tax on US products. Weighted average tax is 13%. Whereas US charges only 3% on our products. So naturally 10% gap is there between Indian tax and US tax on their products. So 10% tax they have to levy, whereas they have levied 26%. So how that 26 came, and this is the formula where they have told that they have what they did was that they have divided trade deficit divided by exports to US and again divided by 2. This is the formula they have used to arrive at the reciprocal tariff. For example, Indonesia trade deficit. If you see that 17.9 is the trade deficit they have with US, and exports to US is 28 billion. So if you divide 17.9 billion by 28 and give a discount of 50% means it will come to 32%. So this is the formula they have used it, and many of them are telling that it's a complete nonsense formula, because some of the very poor countries, they don't have money to buy US products. Naturally, their trade deficit will be high. They will, one African country is there, just they are exporting few diamonds to US, whereas they are not importing any product from US because they don't have money to buy US product. Naturally, they have huge deficit with US, though the amount will be small. So using this formula, what will happen? The reciprocal tariff will come around 70-80%, it will come, because they are not importing any product from US. Only trade deficit is there. So like that they have done it. So it's a pure nonsensical formula they have used it, and many told that it won't come it. Anyway, they are going to pass it. As said, they passed it after market fell very sharply. Initially, stock market fell very sharply. Trump told he is not going to revoke the reciprocal tariff. He is not going to pass it. Whereas after the bond market started giving negative indication, then only he passed the reciprocal tariff by 90 days. And this is the weighted average tariff. Now it has come to 29%. US tariff rises to 29%, highest in 100 plus year. Previously, the highest tariff was in 1929. The Smoot-Hawley Act, it came in 1930, and during that period, what happened was that because of very high tariff, US finally went into big depression at that time. So stock market fell almost 70-80% during that time, and Great Depression, everyone knows that. If you see the history of the US economy, two times previously they had a big depressions. One is 1930, when at that time they hiked the tariff by to 20%. Just now how Trump is saying now, at that time the same thing happened. Trade deficit is very high, we don't want foreign products and we want to manufacture it in US. Like that they said, and they increased the tariff to very high level, 20% at that time. And what happened was that US economy went into Great Depression. Then they again started reducing it, and it gradually came down. Now it is less than 5%. Now suddenly he has hiked to 29%, which is the highest in 100 plus years US tariff. So now, because based on the history, now everyone saying that if they implement like this, naturally what will happen is that US will go into the big depression which it was seen in 1930. So the other major one, now what Trump did was that he passed for all countries for 90 days, whereas China he didn't pass this. He said China retaliated with tariffs, so I am going to continue with a tariff with China, and he did not remove. And if you see the trade data for China in 1994, that is last January to December, last year, calendar year, US imported 438 billion from China, whereas exported 143 billion. So there is a trade deficit of 295 billion. So it's a big trade deficit. So it hasn't happened in a single year. It has been happening for the last 15-20 years. It has been happening where China continuously exporting products to US at a lower rate, and there has been and they are getting big market in US. If somebody has gone to Walmart in US, in Walmart and all, they see most of the consumer products and other products all made in China only. They will able to see textile products, consumer daily using products and all. It will be mostly made in China products, and main reason is that the trade deficit is high. So the problem is that trade deficit is high, everyone knows it, but how we are going to solve it, that we have to see it. So because of very high trade deficit with China, it was slapped with a higher tariff, initially 20, then 34, again it was hiked by 25 like that. Now it is the highest, currently now standing at 145%, it is totally. And retaliation, China also levied 125% tariff on US imports, and also banned some important rare earth materials exports to China, which may have some impact on semiconductor industry in US. The other big thing which we have to thing is that China currently owns 755 billion worth of US treasury securities. That means they have lent this amount to the US government. Treasury securities, what government needs money, so they are releasing the bond, and someone buying means the government is borrowing money from them, and China owns 755 billion worth of US treasury securities, they own it. And what happened, they sold 50 billion in a single day when this war happened last week, a trade war happened, and bond yield suddenly spiked from 4.1 to 4.5 level, it spiked. After that only Trump suspended this tariff for 90 days, because Trump before coming to becoming a president and campaign, he told 3-4 things majorly. He said he will bring down the interest rate. How to bring down the interest rate? By reducing bond yield. Whereas after China selling some US treasury securities, what happened? Bond yield went up. So what Trump thought, it did not happen. Instead of reducing bond yield, bond yield went up. If bond yield goes up means US Fed will not cut interest rate. The second thing he said was that he will bring down the crude oil prices. US will produce more crude oil, and he will bring down the crude oil prices, which will benefit US citizens, he told. So that has happened from $75 to $63 now the price is. So that has happened. The third thing he told was that he will bring manufacturing back to US, because trade deficit is extremely high in US, which is unsustainable, and he will bring back manufacturing in US, which was there in 1940s. So after World War II, gradually US started losing the manufacturing facilities, where it started going to Japan initially, then to China and other Asian countries. And he said that he will bring back all the manufacturing to US, and that is why he has put in tariffs, so that manufacturing will come back to US. So that will happen gradually. It won't happen overnight. It can be done gradually, whereas he want to do it in a single year. That is why the problem started. So trade war impact now started reflecting in US bond market, and if US bond market interest is very high means most probably Trump will surrender it, because when interest goes up means then US Fed will start hiking interest rate. That means mortgage interest, everything will go up. And this is the bond yield. Yesterday it is around 4.45. It went up to 4.5. Generally, historically if you see, when equity markets fall, commodities fall, like 2008 or COVID time, bond yield also will fall. Bond yield also will, if you see the 2000 chart, I haven't taken just a 5-year chart, bond yield also will fall. Whereas this time what happened was that equity market was falling, commodity market was falling, and bond market also falling. Actually it should have come down, whereas this time what happened was that bond yield also went up. Actually bond yield should have fell, whereas this time bond yield went up. So it is this time it is an exception, the bond yield going up when equity markets and commodity markets falling. And this is the large US bond holders. Japan, if you see, almost 1 trillion worth of US treasury holdings they are having. That means Japan has lent almost 1 trillion to US government. This is what it indicates. China 760 billion, UK 740, and Luxembourg, Cayman Island, Belgium, Canada 350, France 335 billion it's holding. India, if you see that, India is owning 225 billion worth of US treasuries, they are holding it. See, every 2 weeks government will release this US Forex, Indian Forex reserves. So 650 billion, 660 billion right now. So in that 650 billion, it is 225 billion is this US bond they are holding it, Indian government is holding it. See, there was one theory was going on. Trump is bringing this recession intentionally. One theory was going on that Trump is bringing this recession intentionally so that the bond yield will fall, and huge US treasuries are coming for redemption so that he can finance it with low interest rate. That's what everyone was telling in many medias. But I don't accept that argument, because if you see that, who will refinance it? The major holders are Japan, China, UK, Canada, France, Ireland, all these countries, Luxembourg and Cayman are almost you can't take it in their account because lot of black money and all will come in these places. Cayman Island, for tax avoidance, many company will keep uh, a dummy address and then they will do it. So if you leave aside Luxembourg and Cayman, Japan, China, UK, Belgium, Canada, France, all these European countries and all, no, they are the big financiers of this US bond. And if bond yield falls, how and if you are going to hit them through tariff, whether they will refinance them at lower yield, I don't think so. See, China, they have put in 150% tariff they have put in. Will they refinance the US at 4% interest rate after you slapped at 150% tariff? I don't think so. They will stop financing the US government. Then how Trump will be able to refinance their big treasury which is coming for redemption in the next 1 to 2 years? So that argument, I don't believe that Trump is intentionally bringing this recession to make the bond yield to fall so that he can finance it at lower rate. Crude oil prices, one positive happened was that crude oil prices from $80 it fell to $63, and that is one benefit which we have seen it. But it did not pass on to the consumers, but government got benefit because 2 rupees excess duty they have hiked it last week. They don't want to oil marketing companies to get all the benefit of lower crude oil prices, and government is going to take part of the benefit, whereas as a consumer we are not going to get any benefit on falling crude oil prices. This is the US oil production. See, why I have put this slide is that see, when you run a government you have to do things rationally. You cannot just blindly do something and try to do something overnight, which has to be done in 5 years, 10 years time. So it's a very good example. See, US oil production started falling. If you see post 1990, US oil production started falling gradually. It started falling. It went till 1970. Then it hit the some consolidation happened. Then US oil production started falling. At that time in 2005, 6, 7, what happened was that crude oil prices, which was around $20, $30, suddenly went to $140. We all know that US is the largest importer of crude oil at that time. So at 140, 120, 130, $140, if they started importing means in US there is no APM. That means the price will immediately get reflected in the petrol bunks and fuel pumps. If crude oil goes up, immediately price they will hike. If crude oil falls, immediately they will reduce the price. So when crude oil went to $130, $140, all the fuel prices went up very sharply in US, and the consumers started impacting. So what US government decided was that if we start importing crude oil prices at $120, $130 means our economy cannot sustain, our consumers will hit very hard. So what we have to do is that we have to increase our own domestic production. So at that time in 2009, US government decided and enacted an act that they want to increase the crude oil production through shale oil, and they relaxed so many environmental acts and all, because while extracting shale oil, shale gas, what will happen is a lot of pollution will happen in that area, and they have relaxed all the pollution acts and all, and their objective was to increase the crude oil production and self-sufficient. They want to become the self-sufficient, and almost 3-4 years for them to took it, and after that you see in 2011 onwards, if you see, US oil production went up very sharply, and then where oil prices fell, so the production also fell, because shale oil cost very high, around $40, $50 it will cost. So when crude oil prices fell below $50, the production also fell little bit, then again production went up. So they decided that US want to become self-sufficient in oil, and they achieved it. If you see that the production went up very sharply, but it took 5, 7, 10 years it took it for the production to increase. The same way the US has trade deficit, they know the problem. So to address that, to bring back the production in US, it will take time. It will take 5 to 10 years. Like Trump says, you want to bring the manufacturing within 1 year, 2 year means it's not going to happen. So the same way how they tackled the US oil production issue, same way if they tackle means it will be smooth and no one is going to get hurt. But if they want to put huge tariff of 50%, 100% and want to bring US manufacturing back means it is not going to happen. It will hit US more than anybody else. Gold prices, one of the biggest beneficiary, it's at all-time high, continuously going up. Now we are seeing a vertical rally now. See, generally during the last leg of the rally only we will see a vertical price movement. It looks like that. I personally feel, I am not an expert in gold and all, but I personally feel that we are in the last leg of gold rally, and many retail investors are also showing very good interest in buying gold. Previously when gold prices goes up, the demand will come down. But not now. If you see that when prices are going up, more demand is coming and buying ETF and all. Retailers are very much interested. Now they are telling that per gram it will touch 10,000. Naturally, it's always when index is around 85,000, people will tell that index will touch 1 lakh. With the round figure, always people will tell. The same way now they are telling that the gold will touch 10,000. Suppose if it comes to 10,000, 11,000, if it comes per gram comes means, then the next level they will start telling 15,000 or 20,000, straight away they will jump and forecast. In reality, no one knows what is going to happen in the gold price. Now China, if they stop buying US bonds means they have to park money somewhere else. Maybe they may be buying more gold than before. So what investors should do, that is more important. But in the 10 years back and all, when market falls, investors will be will get more panic. Now that panic is not there. Most of the retail investors are willing to invest only. Even if you see the SIP amount, it hasn't fallen much in the last 4 months. Marginal dip was there, but still people are willing to put money in that. And if you see that currently valuations, if you see, they are reasonable, but not at throwaway. Extreme cheap we cannot tell. Reasonable valuation means you will get reasonable return. But during COVID fall, many stocks fell very sharply, but from there it went up by 3 times, 4 times like that. Like that, it is not going to happen now. If you buy now, you will get reasonable return because the prices are not at throwaway prices, now at reasonable price. And should make proper due diligence. See, one thing what I am seeing is that many stocks in the last 2-3 years went up very sharply, again fell for 50%, 60%, and in that many stocks are not going to reach their previous high. That is definitely going to happen. Only select stocks are going to reach their previous high, and multiple events are happening where no one knows about anything beyond a point. Long-term gainers and losers will be known in coming days only, because multiple events are there. How much he is going to charge, and 90 days pause has been given. Beyond that, whether he will further extend it or not will be known only in only time will tell the answer. But whenever you buy a share, just these two are very important. First is that when you are buying a share, please see that reasonable valuations are there. And second thing, whether the company will grow in 2 year, 3 year time, whether the company profit will go up from here. These two questions you ask by yourself, and then you buy the share. If it is yes, you buy it. Otherwise, you don't buy. These two are the very important criteria to make long-term money in equity market. Whether the valuations are reasonable, yes. Then if a company will grow in the next 2 years, 3 years, yes means then then you can buy the shares. So you before buying any share, just you ask these two questions by yourself and then make investment. And this is the RBI. Again, they have cut the rate 25 basis point. They have cut it. Now repo rate has come to 6%. Bond yield also, if you see the Indian bond yield fell sharply, and if you see the US bond yield, I told you previous, now it went up, whereas Indian bond yield is holding at a lower rate only 6.47. it went up to 7.6 in 2022, mid 2022. From there it has fell, and in the recently after the new RBI governor came, it fell very sharply because of his extreme dovish actions. And RBI action is very supportive to growth. As just I said in my initial talk, both RBI governor and SEBI chief chairman, both are likely to make our economy and our capital market very vibrant. That's what their initial actions and all revealing. That will be for long term. Near term, we don't see it, but in long term, we can feel that benefit. And moreover, India major exporting country if we see, and many US CNBC website, if you go through, previously India won't be mentioned, but if you see now, they are frequently mentioning about the Indian economy, what is happening in India, they are frequently mentioning it, and in that this chart has been taken from them only. If you see that, they are saying that India is a diversified export destination. We are much insulated from other Asian countries like Taiwan, South Korea and all. One, our exports are less, and second thing is that our export destination is very diversified, and US we are exporting just 18%. The next biggest country is UAE, Netherlands, China, Singapore, like that it is coming. So they are saying that we are much insulated from other countries on these tariff issues. Even if tariff is levied, our economy it will hurt much less. So 2 slides before I told reasonable valuation and future growth. These two are important criteria for selecting a stock. And if you see that many stocks, good fundamentally strong stocks I am telling, are seeing time-wise correction right now. If you see 5 years, 10 years back, if you have seen a stock price, the same stock price is now after the passage of 10-year period. The main reason is that high valuations and slower growth are leading to this time-wise correction. For example, Bata, it is now trading around 1,200 rupees. If you see 4-5 years back, it was around 1,500, 1,600, the price went. So Bata is a good company, everyone knows the brand, but stock price has been going down. TTK Prestige, almost 7-8 years, the price is same. The price which you are seeing now, it traded 7-8 years back. Whirlpool, MNC company, the price was around 7-8 years, zero return. Imami, the price which you are seeing now, it was in 2015, the price was same, around 600 rupees now trading. If you have seen in 2015, the Imami stock price, it is at 600 only. So like that, I can give many examples which are good companies, which has good brand names, good business, but still if you see that last 10-year, 5-year return is zero. Main reason why we are seeing such a long time-wise correction is that at that time the valuation was very high. I remember that TTK Prestige was trading around 70-80%, 80 PE, and the last 4-5 years the growth is zero. So what will happen? The time-wise correction will come. Similarly, the Whirlpool, Imami, the growth was not there, and the entry valuation is very high. And because of that only we are seeing this time-wise correction. Even now if you see the stocks, many stocks are trading at very high valuation. If we enter means, if there is no growth means, most probably next 10 years we are going to see zero returns. And it is happening not only in India, many MNC companies also there. For example, Nike is a very well-known shoemaker in US. If you see in the last 10 years, the return is zero. In 2015 price, Nike stock price, it is trading now in US at same stock price. Because of after the tariff announced, the price fell very sharply. Because most of their production base is all in Vietnam only. They are producing at very low cost level. Because of tariff levied, the price fell very sharply. Like that, if you see many European stocks like a Boss of Germany based company, if you see that last 10 years 0% return, mainly because there is no growth. So two questions we have to ask ourselves when we buy a stock is whether company will grow, profit will grow. The second thing is the valuations are reasonable. If not, then we may have to, even though a company is very fundamentally strong company, good company, but we may have to undergo a time-wise correction. Foreign institutions, if you see, 2000 crores net buy in March. So after many months of selling, October, November, December, January, February, huge selling was there. March, 2000 crores by net buy. Even in April, during this tariff sell-off, if you see that the selling, just one day we saw a big sell-off. After that, we haven't seen major sell-off. Just 2000 crores, 3000 crores selling was there. Mutual fund data yesterday came, 25,000 crores inflow is there. SIP also near to 25,000 crores. So nothing alarming during this market bottom, because during other falls and all we have seen huge fall in our inflows, whereas this time we can say it's a steady inflow, we can say. Events, only these two are important: Trump action on tariff and trade war, what is going to happen between US and China, then Q4 results we have to see. Already TCS came with results. All these big IT companies is slowly becoming an dividend yield stocks, because growth, there is no major growth is there, but companies are fundamentally strong, they give good dividends, whereas growth, because of lack of growth, stock price will not go up. The now price has corrected well, so from the here big fall unlikely, whereas a big appreciation also very unlikely. Maximum 10 to 20% upside is there, and we have to enjoy with the dividend. Major price upside is very limited in large cap IT stocks. Okay, thank you. That's